We'll finish it tomorrow. Then we'll talk about trading psychology and emotional safety. So, but today alone, we'll be talking about the reduction to tech analysis, understanding candidate pattern, support and resistance level, and let's say we stop at deadline and channels for today. So tomorrow, talk about cognitive displacement, chart patterns, you understand. So welcome guys. Today might actually be kind of like say I don't want to use the word hectic, understand. But if you have any questions, ask. We are already getting to the main view of why you are here. So now for me here we can see my B25 screen, I presume. Now the introduction let's go to the introduction to technical analysis. What do I mean by technical analysis? If you are actually here in the last class, I explained what the technical analysis means. It's more or less like you judging what will happen or you predicting what will happen to a particular peer, judging from what has happened in the past. That is, you are judging that peer based on the past to predict the future move. To predict the future move. And this, for instance, like I said, technical analysis are needed across all peers we are trading, be it the technical, so be it the forex, be it the crypto, be it the synthetic indices. For instance, the chart we are having in our screen are the synthetic indices, which fundamental analysis does not affect. The only take just technical analysis. So, in other way, technical analysis is very important in any area you think you find yourself in trading, be it crypto, anything, name it. So now, understanding the candlesticks. Now, I think all of you should be wondering that all these jargons on the screen, how do you understand it? These things you are seeing on your screen now are called the candlesticks. Normally, if you should notice, if you can see very well, you see they are just of two colors, green and black. Normally, they have been, because of you guys, let me change it to the color they are supposed to be. Normally, the color is supposed to be, let me just leave it. Normally, the color is supposed to be red and green. That is, this one that is black is supposed to be green. So I customize it, you understand, for myself. You understand? To be black. You understand? So these are candlesticks. Now, what are the works of these candlesticks? Why candlesticks? You understand? Now, these candlesticks are just giving you information of what are happening in the market. You understand? It's more or less like me telling you that the price of Tinubu is not doing well, or Tinubu is doing well in the market in the country. That's why the rate of dollar is dropping down. I said that wait, and you understand. Now, this candlestick is another language. You understand? It's the market language. So you have to understand this language before you can make a decision. You understand? You know, if I can, people telling me tomorrow that okay, Nigeria is going to go to the state of collapse. Me understanding that fact already, having that information, I might decide to leave the country due to the information, because of the information I've had, right? So exactly same thing here. Your decision to buy or sell will be on the information you have been given and your ability to interpret that information very well. And that's why you are here, so that you'll be able to do that very, 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 very well. So we have no issues about that. Everybody have been admitted inside this class that not getting admitted, right? So now when you're talking about the candlesticks, now, okay, before going back to the candlesticks now, this is what we're having here, the candlesticks. There are other ways in which the market can actually, like say, represent, the market can give us information about the market without using candlesticks. You understand? For instance, we can use the bar charts. This is the bar charts. And as you can see, it's kind of different from the candlestick. This one is looking weird, normally. Very, very weird. And you can use aloe candle. This is more or less like still this is more still like candlesticks, you understand? And at the same time, you can use line. Most of us are very, very, very went to secondary school, we're taught how to draw charts. Speaking of lines, you understand? And we can still use so many things. Areas is more or less like line too. You can use baseline, do you understand? So many things. But we are using candlestick because it provides us with enough information of what we need. Do you understand? The ABC to Z of candlestick is complete. So us trying to analyze it to understand won't be that difficult. Do you understand? Now, we are using the Japanese candlestick. They call them the Japanese candlestick. We are using Japanese candlestick because it provides us enough information than any of the other ones I've showed. Do you understand? So now, let's talk about the candlesticks now. So now we just talk about candlesticks and the Japanese candlesticks pattern. Now, so now, firstly now, we have two type of candlesticks. That's what let me see if I can actually Google. So we'll be on Google instead of chat so that chat will not confuse. Or let's use the chat like that. Can't get confused. Now we have this type of candlestick. We have this type of candlesticks. I'm looking for the one that they have put out Twitter. Okay. Let's say we are dealing with this two. This two. I don't know that. We have type of candlestick. We have the bearish candlestick and the bluish candlestick. We have the bearish candlestick. So reading your notes here. Bearish candlestick and the bluish candlestick. Bluish candlestick. We have the bearish candlestick and the bluish candlestick. Now, this is the bearish, this is the bluish. So most times the bearish color are always in red, but mine is in black. Like I said, I customize it. You understand? It's just telling you that the market is selling. You understand? Selling. When the market is selling or going in a downward, it's called bearish. And then bearish candlestick. Let's put it on selling. Or if it is green, it's buying, or it's going in a bluish move. So now we have the type of candlestick. We have the bearish candlestick and the what and the bluish candlesticks. And these are the two main type of candlesticks we have. Understand? So now we'll go on to the labeling of this candlestick because obviously we said we are using them because they have a lot of information that helps us in the what while trading the market. So now as you can see these two candlesticks now, let's start labeling them. Now, if you notice this particular line at the tip, the line can come here, but the fact that this candlestick here, the line is here. So now this one, let me we call it I. That's the I. Now B is the low. I'll still label them. Then from year to year, the distance of year where this thing starts. This distance here. So let me just let's assume it was like this. Yeah, perfect. So this will be the I. Assuming this will be the I. So this will be the I. This will be the I. Then this will be the low. This will be the low here. Then from this will be the can either call them weak or shadow or tail. Anyone you want to call it. Same thing applicable to here. Same thing from distance from here to here. You understand? While this padded one is called the real body. Along the line, you will know how these things work. So don't bother yourself now. Like can bother yourself, but like don't stress yourself right now. We call this the real body. Call it the real body. The real body. So let's come back labeling this space. So it's more or less like the same thing. Yes, because this one too has the eye. So like the eye, this has the okay, we're not done labeling this one. The fact that it's a bearish candlestick and we said it's selling. So definitely the arrow it means something like this that is it's coming like this, né? And if it's coming like that, you understand? It means it's coming like this, it's selling. So now this particular place is now the fact that it's coming is selling now. This front place will be the opening position. This place here, this particular point here, not this. Beginning of this body will be what the opening position. From so this will be the opening position. Now the place where this thing end now, yeah, will be the what? Will be the closing position. will be the closing position. You understand? So that's for the label of the bearish candlestick. Now, like I said, this tip here will be the high. The tip here will be the low. These tails, these tiny lines above and below are called weak shadow or tail, as you can see here. The one with the body is called the real body. The fact that it's a bearish candlestick and it's selling is denoting that it's going down, right? So definitely this will be the opening position. The closing position, this will be the closing position. You can only know the opening and closing position with the real body. This whole thing is the real body. The fact that it's coming down is a selling candlestick. Means that this will be the what? Opening position, is the closing position. So now everything here with the other bullish candlestick has the same what? The same labeling. That is, this is also the weak, this is the low, this is the high, this is the real body. But the difference between this is that in this particular place now, the market is what? Is going up. So the fact that the market is going up in this particular context, it means that there will be difference in what? There will be difference in the opening position and closing position, which means the fact that this particular one here is opening position for the bearish candlestick. But in this particular place now, this will be what? The opening position. In fact, this particular place now, this will be the opening position. Why this will be the what? The closing position. That is the only difference within the label. Do you understand? Very simple. This is actually giving us this up sign because it's a bluish move. When something is buying, it means it's going up, right? Going long. Definitely, this will be the if something wants to start, something will, if you start from here and finish from here. This is going up now. If you start from here, finish from here. But if this one is going down, so definitely to start from here, it is finish here. You understand now? So those are the label of what the candlestick. Those are the label of what the candlesticks. And like I said, we have two type of candlesticks: bearish and the move and the bluish. Now, for example, now these are the bluish candlesticks. A lot of bluish candlestick, bearish candlestick. You understand? So when you see a bluish candlestick like this, just trying to tell you that the market is buying. And you see a bearish candlestick like this, trying to tell you that the market is what? The market is selling. Now, do you understand that? That's that about that. So now this will lead us to let this one lead us to I hope you understand the candlesticks already. This will lead us to support and resistance level. Support and what? Resistance level, which will also lead us to the demand and supply. I will not let us waste our time on the support and resistance. So I'll just tell you the basic meaning of the support and resistance. Then I'll dive into the demand and supply because that's what is really moving the market, demand and supply. So you won't be bothered. Now, if they are talking about resistance and they are talking about support, this is what they mean. Like I said, we won't waste our time here. The fact that this particular part of the market was coming up and suddenly does they change the direction, started selling. There's a reason for the selling when it does this price. The reason we don't know, you understand, but we know there's a resistance. That is something happened. That's why what we started changing direction around this. So now you marking out that price because you don't know, it means that there's a resistance here, which is this resisted the price from what? From going up. You understand? So this is what's called what? A resistance. A resistance at price 2193 is a resistance. Now coming here to again, this is what? A resistance. Do you understand? If you are following me, just be saying yes, and I'm asking the question. You understand? So now there's a change in direction to as well here. So this was also resistance. Anywhere you see the market trying to change direction through the resistance into the resistance, that price this was also what the resistance. Go ahead and leave your let's go ahead and leave resistance. So we can just call it for resistance one, resistance two, resistance three, resistance four, resistance five. You understand? But when coming back here again, if you notice too, this price was selling, but something pushed the price upward. You understand? There's something doing that work too. Same thing applicable to here. Same thing applicable here. Same thing applicable here. But I'd like you to try to writing this thing down. And we can write it down now. You can later watch and write down. So in this particular concept now, what is pushing back the price up is what we call the support. So now that's where the support and resistance comes in. That's why they say resistance level, support level. So the price of the market got to this level, and there's a change in direction. Got to this level, change in direction, got this level, change direction. So this is a resistance level, resistance level, resistance level. Now, you know why they use this resistance now? Just like I said, that we are doing what? We are doing technical analysis and we are judging the price with what has happened in the future. Now, they all believe already now that if there's a resistance around this place, so definitely if the price of the market should come there in the future, it should resist, it should come down. And as you can see in the future, when the market came around that particular resistance, it came down. When it came around that, this was also a resistance. But you see, when it came around that resistance that time too, it was came down. You understand? Now, this was the support. The fact that it came around that time, around that particular place, it went up. It came around that point, it went up. It came around it went up. You understand? So those are just what they call resistance and support level. So we already believe that if the price of the market should come to this resistance, near this resistance next time, there will be a change in direction. That's just the definition of resistance and support level. So now this will now introduce us to what? Because to supply and demand. Before you can actually draw out your supply and demand very well, you have to know how to spot out your resistance and your support. You just don't go out and draw your zones. Now, this demand and supply are called zones. You understand? So the type of zones we have are demand and supply. You understand? Now, what is our demand? What is our supply? Demand and supply. Now, men looking at this, just like I said, it is not actually a good news for me to wait till when the price of the market is going to come, because I know that they said that resistance, when it comes to that resistance area, there will be a change in price. So definitely it can actually come here before there will be a change in price on this particular place here. And by then, if I should enter by here, I would have been liquidated by that time. Do you understand? So, but I want to be accurate about everything I'm doing. The market is not accurate, but I want to be accurate myself. So now, that's where the demand and supply comes in. For instance, now, supply is the collection. Don't forget, these are zones. They call them zones. So now, resistance supply is the collection of resistance in a particular closed zone. Like I said, this was the resistance as well. So now, if I want to draw my supply, I will just pick these three that are very close to each other. You understand? Okay, fine. The fact that these three are close to each other, let me draw them like this. They are zones. So I'll just put it like this. You understand? But let me just pick these two first. Let's forget that the market has not gotten yet. You understand? So now this is my one. This is my supply zone. You understand? It's the collection of all like layer closest resistance. Now my demand zone will be what? Let's draw my demand zone. The collection of what? Closest support. So as you can see, almost all my supports are inside what? Inside this zone. Can you see? Are inside this zone. So what this is just trying to tell me next time is that if the price of the market should fall inside this zone, anywhere from ranging from the beginning of the zone here to the last of this zone here, there's going to be a change in direction, which is the same thing I'm able to here. And as you can see, when the price of the market came around this zone, there was a little bit change in direction. What actually happened there is another thing. It's actually part of the law we'll be discussing about, the law that is guiding the demand and supply. But I'm going to talk about that today. Okay, that's the next thing we'll be moving to. Now, that will be the next thing we'll be moving to. The law, then after the law of supply and demand, then we'll call it a day. We'll call it a day. Yeah, we'll call it a day. But I will give us assignments about this law of demand and supply. I'll give us an assignment and I'm going to grade it. And at the same time, there will be a price for it. I don't know the price yet, but I'll be picking 1 to 5. You understand? So now, like I was saying, this is what. Let me see if you guys are following me. What's the name of this zone here? Hello, what's the name of the zone here? Eh? What's the name of the zone there? Eh? It's called the demand zone. If you understand this, you guys should ask me. That's why you are here. Why this is called supply zone. You understand? This one is called supply zone. You understand now? Do you understand me at all?
Yes, sir.
It's very boring. It's already 12. Sorry, it is 11. Close to 11 already. Yeah, I don't have to 10. No. What is the boring course that should be 10 in the morning? Which guys want 10, no problem. So now, this is what the supply zone, demand zone. I believe is that if the price of market should fall inside this zone, there will be a change in direction. Now, what I just said now that our belief is that the price of market should fall inside that zone, there will be a change in direction, is what we call the law of supply and demand and supply one. That's the first law of supply and demand. Do you understand? So I already know that we already know how to draw our demand zone and our supply zones now. I believe so. So thank you. God bless you. Now this will lead us to the law of demand and supply. Now the question I am expecting is that, sir, well, I've drawn my demand and supply zone here. That has it ended there? Because now this one is still extending, but you stop at here for the supply zone. If you can see, it broke us. Let me go and say. The moment it breaks it out, you understand? The moment it broke it out, just draw it. Draw it, don't worry, just draw it. But the moment the price of the market breaks it out, it's giving you higher tendency that the price of the market might not come back to this price range that it was using before. You understand? So necessarily it might not come back. Yeah, so you have to just put for new zones. You understand? You know, this was already resistance, yeah. So probably it would have actually just formed another resistance that will make it to draw another zone like this. But that doesn't mean that this zone has gone. You will still use this zone later because this is technical analysis, like I said, price action, judging what have happened in the price, in the gap. So this zone will later be useful. Do you understand? But this leads us to second law of demand and supply. So the first law of demand and supply says what? When the price of the market hits the demand and supply zone, there has to be a change in direction. That's supply number one. Now, how to put this thing in the story mode of why law one, law two, and law three were being propanded. Like we all know, this market is for the market maker. The moment they saw that the price of the market was moving in a regular pattern, which is predictable, that is moving up and down in a zigzag manner and in a straight line, everybody were making. There's no how, because the market is all about liquidation. Everybody was making. There's what I mean by liquidation is the market is all about killing people's money, taking people's money. Understand? Like this market is taking people's money. So now they said that this thing is already predictable already. And the fact that it's already predictable, definitely people will be making, people will be making money. Who will now be paying the money? Because this is how Forex work. When some other people lose, some other people win. So it's more like swapping. You understand? It's more like swapping. So now that's when they came up with demand and supply law 2. Don't forget the law 1. The law 1 said that when part of the market hits the supply and demand, so there tends to be a change in direction in that particular zone. Now, before we go to that second law, let me tell you the advantage of using supply and demand zone against resistance and support. You understand? Now, if I'm being given if I'm being asked a question, and now I'm supposed to answer this question, they don't mind if it's accurately or precisely, but I'm supposed to answer the question and I have to be correct with the question. Now, maybe there's somebody selling provisions in front of my apartment, and this person comes in the morning normally. Sometimes they open the shop at 8 o'clock. Sometimes they open the shop at 6:30 a.m., 8 o'clock, 9:30, based on what he likes. You understand? That's how the person goes to the shop. And now somebody now came to me and said, when do this woman open the shop? Say this and you have a chance to win 20,000 USD. That is, they have to come around that, they have to come when you say they will come, and they will meet the woman in the shop. And you'll be able to win them legally. What will you tell them? Now, if you are telling the person to come around 8 o'clock, you don't know, you are not the woman. The woman might decide to come by 7 o'clock. Which means you are wrong. You have to be accurate. You understand? And if you tell them to come by 7 o'clock, the woman might come at 8 o'clock or 9 o'clock. So now, boss, let's look at this dimension. What if I tell them that just come in the morning? I've won the money, right? I've won the money, but it's left to me now, not to them. So now I'm looking at but when the woman itself wants to come, you've already won the money. The remaining of your thing is that when the woman wants to come, it's just based on that you want to know. Do you understand? So that's how this demand, supply, and resistance and support is. You understand? Instead of you trying to figure out the market to reach before changing direction, just draw out that zones. This is like 7 o'clock here. I just pack everything together. Everything is what is see money. Do you understand now? Do you get what I'm trying to say? Hey, my class. Did you understand me?
Yeah.
Wow.
Yes, sir. Yes, sir. Yes, sir. We can hear you, sir.
Yes, sir.
Yes,
So
we can
now,
hear you.
that's why it's good to use the zone than the resistance and what the support. So now, like I said, this leads us to the second law of demand and supply. Now, like I was saying, I'll be using it in the story mode. So when these market makers, remember market makers are those that are in charge of the market, the big boys. When they saw that, oh, these people are making, there's no way we can liquidate. What can we do? They now propanded like, hey, investor A, Do you know you have to know the law before you can break the law? We already gave them the first law. Let us break it. When we break that law, they will believe that that law is still working. But when we break it, we'll have enough time to liquidate people. What a good idea. They propounded the second law that says that, okay, fine, we are not still going against the first law, but we are just trying to tell you that in this particular context, anytime the price of the market will obey resistance and support and demand zone, sorry, we obey the supply and demand zone, but that doesn't mean that it can never break it. Like now it's obeying, but it broke it here. It obeyed a little bit and broke it. So that's the second law. Now, we've not finished the second law. Now, they are not saying that when there's the breakage in that zone or in that resistance, the price of the market will look for another resistance. Or okay, let me use that. The price of the market is for another resistance. Let me convince you. When there's a break in bluishly or bearishly, for instance, now the market broke this bluishly because it broke it upward. Don't forget what we talked about. Buying means what? Bluish move. You understand? So when the price of the market broke this bluishly, it has to later come back towards to retest that zone. That okay, oh, I don't mean to disrespect you. Oh, this is my buy price, oh, but I'm going. That has to come like this. What's happening here is the third law. You understand? But I like the fact that everything we are seeing everything in this context here. This was supposed how it was supposed to go. To come like this. Like it's more or less like a prodigal son, but this prodigal son has swagger. You know that prodigal son in the Bible came back home and still stayed with the father. This one came back home and still went away. Yeah, working music parallel. I just came to preach and still going back home. The prodigal son broke this zone. Then later came back to check up on the zone, and after checking up, it will now still move like this. Go up. So psychologically, it means that when the price of the market breaks a zone, you understand, broke it either bearishly or bluishly, that is, it can break it bearishly or bluishly. It will later come back to retest. And after retesting that zone, that is coming back to that zone, it will what? It will move back in that direction. It broke the zone. You definitely broke the zone bluishly. After retesting, it will move that bluishly move again. You understand? Same thing applicable to it was supposed the market broke it here. The market broke it bearishly here. That didn't happen to move like this now. That it just came down. Just trying to tell you that part of the market was. We still later was probably use, but obviously this is a support, right? Because the change in direction. Obviously, like I said, it will always use something has to push it back now. We know now. We know the price of market cannot just go back up like that. Something has to push it down. This is a support. This is support. This is support. So any support, let us use this one. So this is support now. So it will be this another support that will push it. You understand? For it to make a test. And now after the testing, what will it move? It will move in the direction the price of the market used to break the zone. The fact that the market broke the zone bearishly, and after the retest, it will move what? Bearishly. You understand now? So that's the second law. Before we move to the third law, let's check. Check. Camera rolling testing. I want to use the zone as an example. Or with time we'll see. What's happening here is what is the third law. So now this will lead us to the third law. This third law is very tricky. And that's why I said we will stop at this third law. You understand? We'll stop at this third law. Now we have to understand the psychology behind this movement. Because What's actually happening here is like we are showing you movements, and these are the movements we use to predict the market from the higher time frame to the lower time frame. And as well use this movement to pick what? Use this movement to pick directions and entries, stop loss, and everything. So now I'll give you the assignment I want you to pick. So now, like I said, this is the movement. And you guys, the assignment will be like you guys will construct your own movement yourself. We'll do an example of it. For you guys to construct your. If you can do this thing successfully, I swear to God Almighty, I swear. See, it's very simple, but if you can do it, it takes you to practice it. It won't take hard, but just take it like, okay, I want to practice this. Just like, I want to do this assignment. And when you do it, forget. So now, we've understood the first law, we've understood the second law. Now, right? So let's make an example of the move of the first law and second law. So now, let's say I want to draw an empty space. So you're just telling that the market is coming like this, it's going like this, it's coming like this, it's coming like this, coming like this, coming like this, it's can break like this. It's going to come like this. Now, this move I just drew. Now, I assume the move on my head. And me assuming the move on my head, the move is valid. Because what? I was respecting the law of this first law and second law. I was respecting them in my head. But obviously now, this was resistance, support. And now if I'm to draw them, I'm going to draw them like this, right? So what actually happened there was the first law, which was the price of the market was respecting the demand and supply. But when it got to number 4, the price of the market broke out. So the breaking out is what? So the breaking out is like Osumo law 3, Ojunos law 2. You understand? So it broke out and came for a retest. This retest now is what? Is what? The what? The law what? Law 2. Then after going, it came back again, trying to tell us that it was trying to respect. But at the back of your mind, you already know this thing that after the breaking, it's going to go up. That was the second law. So obviously, the still was going to go up. But this was what? What actually happened there was the first law. What happened there was the first law. The breaking and the retest was the second law. The next thing happening again is what? The first law. And what happened there again? The second law. And it was moving. Now let's give another example. Now see this example now. This was the resistance. This is resistance. Now this was the support for this B was the support. This D was the what? Was the support. Let me change the color. Now, as you can see this now, this was what resistance, this was support, resistance, support, resistance, support. Now, when the price of the market broke this support, as you can see, it broke this support bearishly. It came forward, a retest. Definitely, the fact that it was actually coming up to retest this zone, this was the support, but immediately it retested the zone. The support changed from support to what? To resistance. Know that at the back of your mind. After the breakage and the retest, support will change to resistance, or the resistance will change to support, depending on the move. Maybe it was a bearish or bullish breakout. But for this instance now, this was a bearish breakout. So the support was it broke the support, so the support will change to resistance. It was supposed to be a bullish breakout, then it will change the resistance to support. I hope you got that. So now see, it broke this support, then found another thing that pushes the market up to make the retest. Then immediately the support changed to resistance. Then immediately again, it broke this what? This support, right? And retest. So what's actually happening here is what? Purely second law alone. Okay. So these are the examples I just want to just draw it. So any eye is coming from your head, but just justify everything with what? Justify everything with the law. Now, this third law, I don't want us to talk about the third law now, because it's not actually confuse you about everything. I want you guys to practice on this first and second law. Then tomorrow, by 4 o'clock tomorrow, we'll talk about the third law alone, 30 minutes or 1 hour class. You understand? Then in the evening, we'll now come back. You understand? And discuss the three together. And by then, say, you guys will have been submitting, you guys will have submitted your, what's it called, the assignment, which is you drawing this thing. And we'll be giving the first three prices, at least. So, like I was saying, now, what type of law is this for now? I just drew. Anybody in the house? What law is this representing?
Which one, sir?
Eh?
Which one? Which one are you talking? Which one, sir?
This one I just drew here.
I can't even see. Which one?
You can't see.
I can't see, sir.
Yeah, let me zoom it. Let me increase the best. Oh yeah, this law now. This movement, which law is it respecting?
The first law.
Eh?
The first law.
Yeah, this representing what? The first law. That is the law that says that the price of the market has to respect the demand and supply. That if the price of the market hit these zones of either the demand or supply, there has to be what? A change in direction. Correct. Who was that? Mr. Victor.
Yes, sir.
Harrison.
Eh?
Yes, sir. Victor, sir.
I can't hear you.
Hello, sir.
What is your name is?
I said it's possible now.
Okay. So now, or should we talk about the third law?
We
Okay,
can.
let's not waste our time. Let's talk about the third law. Let's talk about the third law so
Okay,
that you'll be able to give me the assignment and everything. But I'll just make sure that you guys understand the third law. Now, having understanding the first law and second law, these market makers, we are considering our storylines now. They now came back again. They were like, these people are very, very, very mad. When did we even start the second law that we even thought that we have liquidated a lot of them? But yes, they already getting this first law and second law. They were like, I'm tired though. So what do we do now? There's nothing we can do. We manipulate the market against them. How can we manipulate them? They already know these two laws. How can we find our way in manipulating them? They were like, Okay, let us find our way around. Let's find our way around all these two laws they know already. Let's find our way around it so that we can actually collect money from them. You understand? Like, okay, it's a good advice. We'll go against it. But what's the law exactly? Hey, we'll just make sure that law 2 looks somehow, but it's still going to be law 1. That's what I'm trying to say. They will think it is law 2 that is want to happen, but it's still law 1 that is happening. They will now make law 2 to happen. I don't know if you understand that time. It means that they will make us to seem as if law 2 want to happen. That is, they want to be a breakout. That is, they want to be okay. Sorry. That is, they want to be a breakout. In which is not a real breakout, it's a false breakout. You understand what I'm saying? Because and in our own mind, we'll be thinking that after the breakout, it will retest, it will go up like this now. But in their own mind of that lot 3, it will not go like this after the retest. It will fall in back inside lot 1. So do you know what they've done here now? They've played with a lot of people's mind here. They've liquidated people. And a lot of people have not really understood what this third law. And that's why I'm telling you now at the law stage, because that is what is happening now. That is what is happening now. Without going for ourselves, see this market. Can you see? This is the third law that is happening here. I'm actually taking a buy. But yeah, you might be trying to buy, but it's not buy. But the other things you use as confirmation, you understand, to know if the price wants to obey the second law or wants to obey the third law when it says this particular point. You know, at this price, and you'll be left with either going up like this or falling in back into this price range. You understand? So there are other things you will need to understand by then. And one of the things you will use then are your chart patterns and your candlesticks pattern. You understand? So we're talking about the candlestick pattern and chart pattern tomorrow. Very interesting. So which means we'll be able to even like, you know, after talking about the chart pattern, and we'll be able to trade 1 or 2 things tomorrow. Chara, you understand? Even though we can't trade 1 or 2 things tomorrow, definitely next weekend we'll be trading 1 or 2 things. You are done with the basics. You are fucking done with the basics. Then we'll enter the intermediate. Then from there to the advanced. Like I said, this thing is not simple. Sorry, this thing is simple, that is not hard. So now, getting that context about the third law now, I think that should be hard because I actually love the way I explained it. Now, what they now did now is that, like I said, they believe that, okay, fine. If you, okay, let me use this as, let me continue this as this particular one. So now in this context now, in our own mindset, we'll be like, oh, this price will break like this, will retest, then continue this movement one way or the other. I know you should understand this movement I'm drawing now. To understand it. Because this resistance is broke it, it's retest, is broke it. That was the law 2. After the retest, it will start going up. But here now, they didn't allow that to happen. They just made us see that, okay, there was a breakout that was coming back for the retest. Our own mindset was like it was going to go up like this. But instead, it's falling back inside this price range. So now when this kind of thing happen, it's just trying to tell you, trading is more of psychology. It's just trying to tell you that what actually happened there is what is called manipulation. It's called what? Manipulation. False breakout. Did I call it false breakout or manipulation? They manipulated with people's mind. Using what? The first law and second law, just to what? To take their money. And for now, that's still the manipulation. Lucky us that they are still eating. Sooner or later, we or I will discover the fourth law, and I'll still be telling you as it's going. Actually, there's a fourth law already, but that fourth law is not about demand and supply. The fourth law is what? It's all about this validation of uptrend, downtrend, but we'll still get there. You get there. So I think we'll still talk about after this law now. We'll still talk about trend lines. So let's talk about trend lines tomorrow. Talk about trend lines, that pattern, and everything like that tomorrow. Yes. Yes. This third law is this movement is working. I will really need you guys. I'm begging you. I'm very, very begging you. This assignment, please do it. And thank God we've made different examples. Now, this assignment, just imagine it from your head, because everything you are seeing on the charts here now, everything here is imagination normally. Like, you understand what I'm saying? Something you can actually just visualize by imagination yourself. Just imagine, draw. When you are drawing, make sure they are obeying those laws. That you tell me that, oh, it was obeying the first law, obey the second law, it's from the third law. You understand? So now, when this thing happened here, it's trying to tell you that what actually happened here is called a force breakout. Other people call it status zone. Other people call it spin. But at the end of the day, people with different things giving this, they are the ones that make you think that you don't know what you are doing. For those that already trading, the naming doesn't matter. What matters is what the psychology behind it. Do you understand why something like this is happening? Now, and according to the story I've given you, you should understand why this is happening. It's because they want to get our money. That's why they did the manipulation here. So now, instead of it respecting it and going up, it's falling back the price range. So what will happen next is that it's just trying to tell you that this is not the move the market wants to use to break this structure. Instead, it wants to break this structure in a what? In a bearish move. Instead, it wants to break the market what? In a bearish move. And when it breaks the market in a bearish move, what will happen again? It will still respect the normal law. To respect the second law. It will come and retest. And what? It will continue going down. When you see a manipulation now, just know that the price of the market wants to break in the opposite direction. That's one of the sweetest signals ever. Now, a man came out already and claimed this law, but he will not call it law. For me, I will tell you, like I said, I'll be giving you all the secrets in this forex industry. Now, a man came out and called himself the composite man. Wyckoff schematics. Now, coming up and down, giving it different phase A, B, C, D, E. Do it is good, though. It is what is doing is good. It's good. You understand? But at the same time, this is what? Third law. This first breakout can actually be bullish, can be a bearish first breakout. So that is, you understand what I'm trying to say, but it can be a bearish first breakout. That is, the breakout can happen, the first breakout can happen like this. And the market will move like this. Do you understand? So this was the first breakout. And when this thing happens, it's just trying to tell you that the market is what? The breakout from the opposite direction, the first breakout happened. Retest and what? Start selling. So we have questions. Okay, yes. So that's the first law, second law, and third law. So now let us make an example again. I'm not a cool teacher. I will still make an example with the third law using movement. Nobody should copy this thing. Now, if the market was moving like this, I'm imagining moving like this, came like this, came like this. And the funniest thing is that you guys should believe is that every chart pattern, like every chart pattern, that's why we'll be talking about chart pattern at first tomorrow. Every chart pattern, name it, was being developed from what? These three laws. So for instance, let's look at head and shoulder. This was resistance, support. It broke it out. Instead of it retesting it here and continue like this, it broke this resistance, it broke it inside. Use the support. Came like this. Don't forget that once there's the first breakout, it's telling you that the market wants to what? Move in a very direction. Then it came like this. So now tell you is head and shoulder. But it didn't tell you where it came from. No, it came from the laws of demand and supply. Though there's not like the law of demand and supply, but these laws are being propounded by me. And one day, I know I'll write a book about it very well. Very, very well. Yeah, I think that's the next thing I'll do now. I'll make a book about it. I'll make a book about it. Thank you guys for inspiring me. Thank you. God bless you. When the book is out, I'll give it to you guys. The discounted price for, let's think about the price. Till then. So definitely this one. I'm not going to copy the book because I've already even said it. Don't go and copy the book. Don't go and write your own book yet. Please. Thank you. God bless you. I'll never explain after you guys to get it ready to say at this junction. So now, this, like I was saying, that was how this was actually getting. Other people will tell you that, okay, we have what is it called? A rectangular chart pattern. Now, this rectangular chart pattern they are talking about, which law is he obeying? Somebody please, which law is he obeying?
First law.
First law. You understand? So these people are just bringing out this chart pattern to make things easier for you. It's more or less like you're in a school and they're telling you F equals to FA. You understand? So you are being given a question whereby you are being given F, you are being given M, and they are telling you to find A. It's easy. But what if they did not give you M, they did not give you A? You will have issues. So it's okay for you to know how they derived that F equals to MA in such a way that when there's a question and when that question comes out, you're not giving the parameters of mass, force, or acceleration, you will be able to derive according to the question and get your answer. You understand? And that's what we are doing here. And when you have this basic knowledge, anything you are reading in this life about trading, compare it, relate it to supply and demand, because those are the things that move the market. And see if you have the better understanding or you don't have better understanding. Now, can you see the little things we are doing now? We are still relating them back to these laws. That shows you how powerful what these laws are. Now, let's go back to charts, to rectangular. They will tell you they have something like pennants. Imagine what's the difference between pennant and triangle. At least everything is what? Oscillating at a price range. Okay, it might be budding and oscillating at an enclosed price range. We're still the same thing. We are still trading breakouts. And we are talking about breakout. What are we trading about? We are still talking about the law of demand and supply. Second law of demand and supply. Second law of demand and supply. You understand? That's it. Thank you. God bless you. This will be the end of the class. Though we've talked a little bit about the chart patterns, but tomorrow we'll talk well about the chart pattern. But don't forget, I made mention of something. How will you know if the price of the market wants to fall in back or wants to respect? That is when you'll be using your reversal candlestick pattern. Do you understand? Now, in this particular context, what actually happened there? You will notice if the price of the market was to fall in. Okay, can you see? When the price of the market wanted to fall inside this price range, even though this was a breaker, bro, it never showed a reversal candlestick. It showed it was a continuational candlestick. And you that I see continuational candlesticks, and you already know it's a continuational candlestick, you now say that the price of the market wants to buy. No, you know that the price of the market wants to sell. And by that time, you just join the sell from here to here. You TP here. You understand? Do you understand? Oh, there's a fourth law of demand and supply already. But it's not really common yet. It's not really common yet. Yes, and this is it. I like the fact that this thing is just showing all the law. This is it. This is the law. This is the law. This is the law. This particular contest here now, this particular price of the market is still selling. V25 is still selling. I said it is still selling. It's still coming down. Down, 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 down. It's still selling. This is the fourth law. You understand? Okay, without wasting much of our time again, let me explain the fourth law again. But just remember the first law is not really. It's out actually. It's out. It's working. So let me say it's not out. It's out. I won't lie. And it's even convincing people say. Now, Having knowing the fourth, the okay now let's go back to our story mode. Having knowing the third law, these people came out again and said, these people, they are not tired. Ni. Why are they figuring out all our laws? Actually, it might actually be an insider that is giving us the expo then. We don't know. But we know we're figuring out. We always have our way around. She. What do we do now? Let's convince them. How do we convince them? Somebody brought an idea. Now, the idea to of the person is still working too. That if there's a first breakout in the bridge, let's also make a first breakout here. Now, let's think like them. You guys should think like, what can you do to liquidate people from the market? And you see that all these things are things that are now happening in the market. But the fact that you're already thinking like them, you figure this thing out. That's one thing about trading. Like, let us make it to be a first breakout here. That is, to fall in back here again. You understand? And when it's falling back, you'll be confused. For my brothers and my sisters, the co-debaters and accurate timekeeper, at the end of the day, what really matters was is the first breakout. You understand? Because at the end of the day, this is just for me showing you change of character. Ah, God. Trading is just so sweet and blessed. Don't worry. Don't worry. We've not gotten to the change of character and everything like this. Tomorrow we'll do everything. It's already late today. But tomorrow we are not doing it by 10. Only by 10. Tomorrow I'll figure everything we're going to talk about out. You understand? So the brother, this something like this is happening. It's happening. It's happening. You understand? So they call this the fourth law. So let's call this fourth law 4.1. 4.1. Law 4.1. Then the law 4.2, which we wanted to talk about is that instead of it breaking it now, you are still not going against their third law. But instead of it breaking it directly, like breaking it down directly now, you're telling you that okay, you still come back and do another breakout. But you know where you will know that it's not is is the fourth law is that this second breakout will never and ever and ever be taller than this first breakout. It will be closer to it, but can never be taller than it. Do you understand? Then after you now come back, it's now sell. Then after it's selling, then after it's selling, it will make a retracement. You want to respect the zone, to break. And all these first breakers that are actually happening too, they are coming back to retest the zone. No? They are just passing the zone. They are retesting it. They are just passing the zone. Because after actually it broke the zone. It came to retest it. It broke it again. It came to retest it, but it just passed it. It has retested, it has retested. You understand? So that's the first law, second law, third law, 4.1 law, and 4.2 law. Thank you. God bless you. Tomorrow, please, thank you. On a piece of I'm very sorry I got disconnected. I didn't know why I ended the class, but we'll continue tomorrow, guys. Thank you very much. I hope you gain one or two things.
Hello, sir.
Yes, sir.
Yeah, what about other videos? You've only sent one to the group.
You said?
I think you've only sent one video to the
Yeah,
group.
that was the live session we had on Friday.
Okay.
It was a live
But,
session where we just put signal online. We analyzed together. It's not really part of the class. But the one that
okay.
was part of the class was the one we did last week. Right, I think last week Saturday. And we already dropped the link in the on the group though. We pinned it. Check the pinned text on the group. It's actually one of it.
Okay. Okay. The video, right?
Yes. So this
Okay.
particular one as well, I'm actually going to record it this night, and before I sleep, I'll upload it so that you guys
Okay.
can rewatch and you guys be able to submit the assignments.
Okay, sir. Okay, sir. Thank you very much. God bless you.
Thank you very much, guys.
We appreciate your. In fact, I really enjoy your class. Honestly,
That's
it is highly educative and illuminating. So God
Thank you
bless
very
you.
much.
We appreciate your
Amen.
effort.
And you too, sir. Thank you
All
very
right.
much. Mr. Victor, Mr. Bedford, Mr. Ari, and Mr. Jimo. All right, sir. Till
All
tomorrow,
right.
sir.
All right, sir. Take care, sir. Have a
Yes,
wonderful
sir.
night.